Most of the people I've spoken to about BlackRock in the past few weeks have no idea what it is. That's not necessarily a bad thing. Other people have more important things to be concerned with. The trouble is, when you want to find out who BlackRock are and what they do, this is what you get.
This is BlackRock, what some call the most influential financial institution in the world's largest shadow bank, and perhaps the company that owns the world.
What if I told you that there was a company so powerful on the planet today that it affects almost every single aspect of our lives? A company that is so rich that they hold more assets than the GDP of every single country in the world except for 2.
What if I told you there is a robot that controls more wealth than any country on Earth? A robot so powerful that in the last 10 years, it has quietly created the biggest company in the world.
This is a company most people have never heard of, and this company quite literally owns the world.
If you were to go by what 15-minute YouTube videos tell you about BlackRock, you'd think that there was some kind of New World Order shadow group that controls what you see, what you hear, and most importantly, what you buy. They're destroying the climate, causing global financial crises, and they're doing it out of a lust for world domination. Thankfully for you, I'm not afraid to colour outside the lines, so I did my own research, and I found out that while these videos are slick, well presented, and honestly pretty fun to watch, the stories they tell are ultimately just stories. For that reason, I'll explain the truth about who BlackRock are and what they do, and respond to the pretty wild claims made in these popular videos. By the end, even if you know nothing about corporate finance or economics, you should have a healthy, balanced understanding of this financial firm.
The scary fact is that this company does exist and you have most likely never heard its name before.
BlackRock is an investment management company. They buy, sell and hold assets like stock, bonds and alternatives on behalf of their clients, and they currently have $10 trillion in assets under management. When they say BlackRock owns the world, this is what they're referring to.
Most US banks are controlled by BlackRock. BlackRock owns all the major pharmaceutical companies. BlackRock owns most of the mainstream media. And BlackRock oversees roughly 10% of all stocks traded worldwide.
The names on the screen are the 7 biggest banks in America. Who owns these banks? Well, in one way or another, BlackRock does. BlackRock is either the largest or one of the largest shareholders in all of these 7 banks. All of them.
To be fair, this is a lot of money. But it's also the first misunderstanding we'll come across. Sorrell and Moon say BlackRock own or control banks, the media, and so on, because BlackRock owns large portions of the stock of these companies, often between 4 and 7%. BlackRock themselves do not own these assets, their clients do. BlackRock just looks after them, in the same way that your bank looks after the money in your account. They don't own it, it's yours to spend and withdraw as you please. Their clients are individuals, pension funds, businesses and governments who pay money into BlackRock's investment funds. Those funds then invest in particular assets with the aim of making a return for the future. For example, the iShares Core S&P 500 ETF buys and holds shares of the 500 biggest US companies' stock according to their value. So for each dollar you invest in the fund, 6.5% goes towards Apple stock, since it's the most valuable company according to market cap, which is share price multiplied by the amount of shares. Then 5.8% goes towards Microsoft, 3% to Amazon, and so on down the chain until you get to the likes of IPG Photonics Corporation at about 0.1%. Being an ETF, pretty much anyone can buy into the fund using a brokerage. And this one fund currently holds $288 billion worth of US stock. This is why BlackRock shows up as one of the largest shareholders of public companies around the world. People like investing in funds rather than individual stocks or bonds, since it spreads out the risk of companies failing and tanking your life savings. If you invested in this fund and Tesla, Netflix and FactSet Research Systems Incorporated went bust and became worthless, so what? It was barely 2% of your portfolio. Whereas, if you were all in on Bullcorp and they collapse, that's pretty serious. So, if BlackRock doesn't own these assets, how do they make money? If we look a little further down, you can see they charge a fee to have your money invested in this fund. In this case, 0.03% per year, or 3 cents for every $100. Considering this fund would have earned you 14.6% on your money every year over the last 10 years, a lot of people are quite happy to give up 0.03%. These percentage fees are charged on all BlackRock funds, although they're often larger than this, and they're the main way BlackRock makes money, comprising about 78% of their $19 billion income in 2021. But how much power does owning 5% of a company's stock really give you? Could BlackRock use that power for their own nefarious gain?
No other company in history has had this much global influence.
Is it possible that BlackRock could have significant power in order to get any message that they wanted to across the world? I'll let you decide that one for yourself.
Oh, Thank you very much.
The story you're about to hear is equally unbelievable and terrifying. In fact, you would think it was science fiction if it wasn't very real.
Stock represents ownership of a company. If you buy 1 million shares of Amazon stock, of which there are 510 million shares, you own roughly 0.2% of Amazon. However, the power that stock ownership gives you is limited. It doesn't mean you can pull up a chair with Jeff Bezos, but it does give you the right to vote on major financial decisions and to receive a portion of the company's profit as dividends if and when Amazon offers them. It's basically ownership without control, but that's not what you hear on YouTube.
BlackRock is one of the largest shareholders in Goldman Sachs, meaning that they have very significant voting rights as to where Goldman Sachs invests its money.
Not quite. BlackRock is able to vote on behalf of their clients, and they have a fiduciary responsibility to their clients to, quote, advance their long-term economic interests, which means they'll vote for what they think will be the most profitable. BlackRock holds 7% of Goldman Sachs shares, which means once per year they get to vote on who will make up the board of directors, who set strategy and oversee management of the company, as well as whether to issue new shares, to go ahead with a merger or acquisition, to approve dividends. You'll notice they don't get to pick where Goldman Sachs invests. The most they can do if they don't like what Goldman Sachs is doing is to use their 7% of the vote to try and replace current board members with those who will choose a different strategy. But that would only happen with a majority vote, so BlackRock on their own have very little power over Goldman Sachs. They can't even sell their shares since they don't actually own them.
And with so much ownership, BlackRock has a phenomenal amount of power.
My only question is, how? The only mechanism by which they can influence companies is quite weak, unless they and a majority of other investors are on the same page. Take their recent backing of a campaign by Engine No. 1 to oust 2 directors from Exxon, an oil and gas company, in favour of more climate-focused candidates to help drive the oil company towards a greener strategy. That was only possible because other investors joined in and voted with them, like the California Public Employees Retirement System and the Church of England? Even then, BlackRock's reasoning was driven by their clients' economic interests.
We believe more needs to be done in Exxon's long-term strategy and short-term actions in relation to the energy transition in order to mitigate the impact of climate risk on long-term shareholder value.
What's interesting is that there's conflicting criticism of BlackRock from different sources.
In 2019, people were petitioning against BlackRock for being among the top shareholders for oil and coal production.
So how responsible is BlackRock? According to the data, BlackRock is the largest investor in fossil fuels on the planet, as well as the main contributor to money flowing into the destruction of the planet's forests and ecosystems, including deforestation in the Amazon.
If they own shares in Exxon, they're criticised for contributing to climate change, despite the fact that if you invest in Exxon right now, no money would actually go to them. Companies only get paid the first time they sell their stock, and Exxon did that over 100 years ago. BlackRock's investment does nothing to help Exxon, but if they actually do act, with many other investors, on climate issues, they're criticised for exerting too much control.
Because without us, they wouldn't have the financial strength to dip into almost every single industry in the entire world and dictate it according to exactly how they want it to be.
I'm not trying to defend BlackRock. I could never forgive a company that produced this.
Today's investors are building sophisticated portfolios. They need technology that creates connections.
But ultimately, there's only so much good you can do as an investor. If people keep using oil and gas, Exxon will keep selling it, and they'll continue to make money. If BlackRock sell their stake, the price might decrease due to supply and demand, but Exxon stock will still have the same fundamental value. Nothing has changed about the company itself, so in theory, other investors will just snap up the discounts. They also might not share BlackRock's long-term concerns about the economic impact of climate change and won't vote for the climate-focused board members, so perhaps it's better for BlackRock to own shares in Exxon. In summary, stock represents ownership of a company. Stock price goes up and down depending on how much profit investors think a company will make. As a concrete example, Netflix announced a subscriber loss earlier this year, and their stock price plummeted because investors thought Netflix would make less profit, which means less dividends for shareholders in the future. Shareholders do have limited voting rights, but can't dictate how a company runs, especially without a majority agreement. To talk about the other assets BlackRock deals with, they also manage bond funds, which make up a quarter or so of their assets. A government or company will raise money by selling investors bonds, promising to pay interest to the bondholder every year before paying back the original investment in full after a set amount of time. The bond issuers are even given credit ratings representing their risk, like a person's credit score. Finally, alternatives include private companies that haven't issued stock to the public, like IKEA, as well as physical things like gold or buildings.
In places like America, it has been reported that BlackRock and pension funds are paying up to 50% higher than the asking price of single-family homes in the attempt to buy as much of the real estate market as they can, and in turn massively driving up the prices of real estate and lowering the chances of the everyday person like you and I to buy those homes.
And now with our current recession, BlackRock is buying as much homes and real estate as possible, causing regular house prices to skyrocket. BlackRock profits when a society doesn't own their homes but rents.
BlackRock invests in real estate and And some people have said this is what's caused the recent rise in home prices.
Over the last 2 years, BlackRock and other funds using Aladdin's data have begun buying up single-family homes, where they can afford to outbid the rest of us as they have unlimited financing at hyper-low interest rates. The result is home prices rising by 20% over the last 2 years and pushing now even big players like Zillow out of the market.
The videos we've been following use this article from the Wall Street Journal as a source for that claim. D.R. Horton Inc. built 124 houses in Conroe, Texas, rented them out and then put the whole community on the block. The winning $32 million bid came from an online property investing platform, Fundrise LLC, which manages more than $1 billion on behalf of about 150,000 individuals. The country's most prolific home builder booked roughly twice what it typically makes selling houses to the middle class. We certainly wouldn't expect every single family community we sell to sell at a 50% gross margin, the builder's finance chief, Bill Wheat, said at a recent investor conference. The article continues, saying that a wide range of investors are snapping up single-family houses to rent out or flip, competing with ordinary Americans. They then quote real estate consultant John Burns as saying,
"Limited housing supply, low rates, a global reach for yield, and what we're calling the institutionalization of real estate investors has set the stage for another speculative investor-driven home price bubble."
The source of the "BlackRock is buying all our houses and making them expensive" claim says that institutional investment as a whole is just one of many reasons why house prices are rising. For BlackRock, which is only mentioned in passing in the article, real estate makes up $29 billion of their assets under management, which is a tiny amount of the $43 trillion US housing market. It's just not true that BlackRock is the sole cause of the 14.6% increase in house prices over the last 12 months. In a response to the Wall Street Journal article, Vox claimed that yield-chasing investors have turned to the real estate market because it's become a very profitable place to put your money. And the main reason it's become so profitable is the pre-existing housing shortage. Housing prices have been skyrocketing due to historically low supply, low mortgage rates, and the largest generation in American history entering the market looking for starter homes. This is the same thing John Burns said in the Wall Street Journal article. And it's not just Vox and the Wall Street Journal where that opinion is held. The Financial Times published an article last year which said, US home prices surged last year as Americans took advantage of record low mortgage rates to snap up houses in the suburbs. That demand, combined with a tight supply of homes, drove up supply to record levels.
Media outlets like Vox would like you to believe that the housing market problems and the reason that the average person can't buy a home is nothing to do with the fact that Wall Street banks such as Goldman Sachs and BlackRock are flooding the market with money. But what they don't tell you in this article is that Vox is actually sponsored for a very long time by Wall Street bank Goldman Sachs. And on top of that, BlackRock actually owns a part of Vox by owning shares in the parent company of Vox called Comcast. So who can you trust?
This is the kind of thing that people do to me in YouTube comments. Instead of addressing the points I've made, they call me a paid New World Order shill, or question my gender, or something like that. Just a little explainer from the editing booth. The sponsorship Surang mentions from Goldman Sachs towards Vox is not what it seems. When I initially heard that, I thought it was something like Goldman Sachs has sponsored Vox to write like some articles or something, like puff pieces. I found some articles that painted them in a positive light, but they didn't disclose any sponsorship. And they look just like news. But what I did find was a single podcast episode in which Goldman Sachs had advertised its own podcast on Vox, and they were clearly mentioned as a sponsor.
The Weeds is supported by Goldman Sachs. To learn about developments currently shaping markets, industries, and the global economy, subscribe to the firm's podcast, Exchanges at Goldman Sachs.
So if this is all it takes to kind of disregard anything Vox has to say about any financial institution, then I don't think that's very reasonable. To be fair, this is complex stuff to deal with, and the chaos of the world makes these kind of grand narratives compelling, because they simplify complex phenomena like home prices into good versus evil. And when you see that narrative questioned or attacked, it's much more comforting to find a reason to distrust the source, rather than deal with the fact that the world might not be the way you think it is. I don't want to paint my comment section as some kind of desolate wasteland though. I do get lovely comments that I really appreciate, and I do read all of them, for better or worse. But there is definitely a theme I've noticed with people who disagree with what I'm saying. Often I'm the target rather than the argument I'm making. Not always, but it seems to be, in this case, Vox is the target of the criticism rather than the argument the writer makes in the article. I don't blame anyone for believing this stuff, because it's hard and it's nebulous to grasp if you don't have someone to guide you through the basics. But I can't excuse them. It's promoting the kind of closed-minded thinking that would have left us believing that bad smells cause illness and that you can determine someone's intelligence from the contours of their cranium. And also, Vox literally tells the reader how to stop its supposed sponsors from profiting.
Investors go where the yield is. Want to stop them? build more homes.
Earlier, Surang said BlackRock owns a part of Vox through their parent company Comcast.
So who can you trust?
She and Moon continue that line of reasoning in these clips.
In one way or another, BlackRock owns a part of basically every media organization or major news outlet on the planet.
One of the ways BlackRock controls the world so well is through its control of the media. Together with Vanguard, an investment company they also partly own, BlackRock now controls 18% of Fox, 16% of CBS, 13% of Comcast, who themselves own NBC, MSNBC, CNBC, and Sky, and they even own 12% of Disney. This is very important because it means that for any of these companies to decide on company policy, they must now also consult with BlackRock before doing so.
This is the main core of the world domination / ownership argument. The story says BlackRock is trying to control the world using these companies for their own benefit, despite the fact that in reality, BlackRock has very limited control. You need a majority of other shareholders to vote with you in order to do anything, and even then the most you can do is elect the board of directors who can themselves only make decisions on mergers, dividends, and the hiring of senior managers. What BlackRock themselves want is clear. If they get their clients the best returns on their investments, more people will invest in their funds, giving them income in the form of those percentage fees charged on the funds.
Now, if any of this stuff scares you, it kind of should. Companies with this much power can single-handedly sway the economic future of our world.
From everything I've watched and read over the past 2 months making this video, BlackRock is not working towards world domination, or trying to pull the strings of everything in our entire lives. But they are difficult to understand, especially if you don't know much about corporate finance or economics, as is the case with most people, including me. I definitely can't overstate how complex and weird this kind of stuff is. This is really abstract financial stuff to get into. And on the surface, yeah, it does look like they control the world. Because it's public what institutions own, stock-wise, they appear at the top of all these lists on, Yahoo Finance. I can totally see why watching these videos, or even making them, you come away believing, oh, there's this not very nice force in the world doing bad stuff. And I commend the people who made the videos. I like them. I like the videos, even though I think they're wrong. And that's what the video's about. I don't want to be like, oh, curse these people for making videos. I think it's a great thing to do, especially if they do think BlackRock is trying to take over the world or use AI to control what we do and buy and stuff. I think that's a good thing to make a video about and to spread the word on. I just don't think that's the case. This is why I wanted to explain these concepts like stocks from the ground up, so people come away from this video with some idea of how BlackRock actually works and a more reasonable idea of the activity of this business, which is admittedly quite hard to find out. They don't pose a threat to world freedom or anything like that, but I fully understand why people don't like them. There is another part of BlackRock's business that's worth talking about, a separate branch which definitely helps feed the world domination narrative.
We are in the midst of a serious financial crisis, and the federal government is responding with decisive action.
There are a couple of names for the financial unhappy times that happened between 2007 and 2009. I think the subprime mortgage crisis is the most accurate name. Mortgages are loans people take out to buy homes. Mortgage-backed securities are big bundles of these loans that can be bought and sold like stocks or bonds, and an investor receives a proportional share of the loan repayments borrowers make as income from the mortgage-backed security.
If this sounds familiar, it's because these are the same mortgage-backed securities that led to the 2008 meltdown. But before that happened, this securitization of debt was considered really innovative.
This is actually kind of true. Packaging these loans together and selling them to investors meant the lending banks made profit immediately, rather than having to wait 30 years for the mortgages to be fully repaid. Banks could now lend to more people, which means more people can get on the property ladder or start businesses or whatever people use loans for. They were innovative, but they were absolutely not created by BlackRock's founder Larry Fink in the 80s to sow the seeds for a global financial catastrophe to somehow benefit his not yet existing company 20 years in advance, as some videos suggest.
Larry became an expert in these little understood investments during his time. However, this success didn't come without a price. He wasn't going to make this money for someone other than him, and so he began creating a ticking time bomb, and only he knew how to defuse it. Earlier on, I mentioned a ticking time bomb that Fink helped create in his early days at First Boston. Well, this time bomb was now ready to explode, and in 2008, the worst financial crash since the Great Depression struck the world.
These financial products have been around for a long time. In fact, we still use them now. The trouble wasn't with the mortgage-backed securities. The trouble began in the early 2000s when banks started lending more subprime loans and packaging them up. A mortgage is subprime when the borrower has low or poor credit, uncertain income prospects, or can't provide traditional down payments. Despite the added risk of default and non-payment, credit ratings agencies continue to give these loan bundles the highest scores, assuring investors that mortgage-backed securities containing subprime loans were low risk. That's why it's called the subprime mortgage crisis. The true risk of these subprime loans were masked by low interest rates and the rising cost of homes, likely driven by massive availability of credit from lenders to non-prime borrowers, which meant people who would normally default could instead sell off their homes at a profit to pay off their mortgage. It was only as home prices levelled off and interest rates increased around 2006 that lenders saw a rising rate of default on these loans. Those lenders then tightened credit standards or just left the business altogether. Stricter standards for lending meant less people could buy homes, lowering house prices due to less demand and increasing the supply of unsold homes. It also meant people and businesses lowered spending, which had ripple effects leading to the global financial crisis. This is where BlackRock comes in.
During the 2008 meltdown, when the government bailed out too big to fail giants like Bear Stearns, AIG, Fannie Mae, Freddie Mac, who did they hire to analyze and clean up the mess? Another giant financial firm by the name of BlackRock.
By 2008, banks, investment firms, and government-sponsored enterprises like Freddie Mac had complex credit portfolios that had become almost completely illiquid. Subprime mortgages made up a large part of investment firms' assets, growing from 9% of new securitized mortgages in 2001 to 40% in 2006. These loan bundles had become toxic because they were difficult to accurately price due to high rates of default and bankruptcy, so nobody wanted to buy them. BlackRock was trusted to pick through the exotic securities infecting banks' balance sheets and place an accurate value on them. They also helped value assets the government was acquiring as it stepped in to bail out teetering financial firms like AIG. BlackRock was seen as less conflicted for the task, since they owned no investments for themselves and had experience with these types of assets.
At a time where the credit rating agencies like Moody's have lost face, BlackRock's valuations have become a kind of de facto good housekeeping seal of approval that buyers and sellers of distressed assets trust.
BlackRock's experts can take just about any kind of loan-based security and analyze it from top to bottom, literally starting with some deadbeat signing up for an interest-only mortgage in Bakersfield, California, and following it through the bowels of the financial system until it comes out as an ingredient in a credit default swap on the books of a Swiss bank based in Geneva.
That's what Jake means when he says they cleaned up the mess. Once people knew how much these mortgage-backed securities were actually worth, they could buy and sell them more confidently, making the market more liquid. In 2020, BlackRock was hired for a similar task, to help the Federal Reserve buy US Treasury and corporate bonds from institutions in order to add liquidity to the market. You might know this process as quantitative easing, or money printer go brrr. A central bank buys long-term securities from the open market in order to increase the money supply and encourage lending and investment, introducing new money into the financial system. The Bank of England says, say we buy £1 million worth of government bonds from a pension fund. In place of those bonds, the pension fund now has £1 million in cash. Rather than hold on to that cash, it will normally invest it in other financial assets, such as shares, that give it a higher return. In turn, that tends to push up on the value of shares, making households and businesses holding those shares wealthier. That makes them likely to spend more, boosting economic activity. And that's the advisory branch of BlackRock covered. Now all that's left is the robot.
This one robot directs the actions of the US Federal Reserve, almost every major bank and investment fund on Wall Street, and over 17,000 traders. It controls half of all ETFs, 17% of the bond market, 10% of the global stock market, and carries out 250,000 trades every day and billions of forecasts every week. Year after year, it hoovers up trillions of data points on every market, every company, every asset, and now even each of us, what we buy, sell, and say, so that it knows what to buy and what to sell far better than any human being. And you know what the craziest part of this story is? This robot is just getting started.
It's an app. Okay, Aladdin's not an app like you get on your phone, but it's a software platform that helps with risk analysis and portfolio management.
This high-end computer farm literally goes over every possible scenario and pinpoints anything that could possibly go wrong, allowing their clients to make the best investment decisions.
Jake is again basically correct here. BlackRock uses and sells access to Aladdin, and using the software you can buy and sell assets, see what assets make up you or your clients' portfolios, and run simulations to predict what might happen to your portfolio's value in a given scenario.
He loads his $31 billion Strategic Income Opportunities Fund. A scenario called Eurozone Breakup will cost the fund 79 basis points of performance relative to readers' targets, Aladdin calculates. China credit crunch would be twice as painful.
It's basically saying, here's an estimate of what could happen based on past data, and the data it has access to is trading activity of the assets it oversees. It doesn't know what we personally buy, sell, or say, nor does it have access to our private financial information.
Even if your bank or your pension fund doesn't directly fund BlackRock, they most likely still have access to your private information because of their own financial management system called Aladdin.
You see, because of BlackRock's ownership of banks, insurance companies, social media giants, and even pension funds, Aladdin now possesses huge amounts of personal data on everyone.
Don't let these guys mind freak you just because they don't fully understand this stuff. There's a reason there's never any sources to the wildest claims.
As I mentioned before, this is all done through Aladdin, where Aladdin accurately predicts the outcome of every single investment.
And here we see Aladdin's endgame, to be the one hyper-intelligent AI robot that not just controls Wall Street assets, but all assets, public and private. Now, I'm not into conspiracy theories, but even a skeptic...
If I was in a cynical mood, I'd say that since there's no financial incentive to be correct, as long as you're getting views, you're getting customers.
Just to let you know, we've also recently launched a membership to help you become as free of a global citizen as possible.
Did you know 2 out of every 3 guys will experience some form of male pattern balding by the time they're 35? 35 is creeping up real quick for a good chunk of you. That is where today's video sponsor comes in, Keeps. Go to keeps.com/jtrend or click the link in the description.
I want to tell you about today's sponsor, Masterworks. Masterworks lets you diversify with an asset class millionaires and billionaires use to safeguard their riches, rare arts. So skip that waitlist and click the Masterworks link in the description below.
And by the way, you can advertise stuff. There's nothing wrong with that inherently. It just kind of presents a conflicting interest because you want to get the most views because that'll get you the most money. But as JP Sears said, information is not a priority for a lot of people.
What one of those ingredients absolutely is not is information.
They want to be entertained. And these videos are hella entertaining, but the information is not 100%. And that leads to a lower quality of video. In the information sense, obviously the videos look great. Hopefully you now have a better idea of what BlackRock and companies like it are doing, and you can go about your life a wiser and well-informed citizen. So when someone pulls you aside and tells you that this one company owns the world, whether it's BlackRock or whatever the next trendy thing is, you have the experience and the tools to figure out what's actually going on. Thanks for watching. Do not like and subscribe. Whoa! That was a joke. I must have been feeling particularly sassy that day. If you want to support the channel, do like and subscribe. Well, I don't know if liking does anything. I barely like any videos.
And then we come to viewer satisfaction. And this is the second time I've seen YouTube in recent memory placing likes and dislikes prominently in their education on discovery.
If you write a comment, good or bad, I will read it and I might respond. So, that's fun. I had to cut out some stuff that I couldn't find the source of in the video, which was frustrating, but for the next one I'll keep good track of all that stuff and I'll find a consistent way to cite all my sources. Yeah, cool, thanks. Bye.